Hello, I'm Victoria Fritz. In the business news this lunchtime, global equities and commodity prices are rising and the dollar is stronger as markets continue their rally from the sharp sell-off that initially greeted Donald Trump's presidential victory. The broadcaster ITV has forecast a further fall in ad revenues because of worries over the strength of the economy. The company that's behind X Factor and Cold Feet says that revenues were down 4% over the last 3 months and could fall a further 7% in the last 3 months of the year because of political and economic uncertainty. And Yahoo says hackers who breached the firm's systems 2 years ago may have planted software that would give them ongoing access to users' accounts. There is, however, no evidence that they are still active. The revelations could jeopardize the company's pending deal with Verizon. We start, of course, with Donald Trump's US election victory. Asian markets rebounded strongly overnight and European trade is going great guns at the moment. And it's taken many people by surprise who did expect perhaps a repeat of what happened in the immediate aftermath of Brexit. So what's different? Well, that victory speech, for one, it gave investors something to focus on. Donald Trump has promised to make the US the strongest economy in the world, he says. He says he's going to be doubling the economic growth rate to at least 4%, and that's a level that we've not seen since the Bill Clinton presidency in the 1990s. To do that, he's promised to spend $1 trillion on infrastructure, that's building roads, bridges, hospitals, and it would create millions of jobs in the process, he says. He's also promised big cuts in personal and business taxes. His own team says that this is going to cost $4.4 trillion. Other estimates are much higher, and this is where things get difficult because all of this is going to mean big borrowing. It's going to add about $6.2 trillion to the national debt in the US. It's already at record levels, and that's going to be over the next decade. Well, joining me now from the New York Stock Exchange is Samira Hussain. Samira, more fiscal stimulus, tax cuts for everyone. Is that such a cause for celebration?
Well, I think what happened on markets post-election is, as you pointed out, Victoria, most people had thought that we were going to see a Clinton presidency, but that didn't happen. So markets were really taken by surprise. But I think the reality is that they're starting to come to terms with, A, the fact that we're going to be seeing a Donald Trump presidency, and B, perhaps we're going to see some initiatives that are going to play really well for Wall Street and for people here on the New York Stock Exchange. So I think that's why we saw that rally. In fact, yesterday by the end of day trading, we were trading above a record high. So it certainly fueled a lot of optimism. In fact, there were people on the floor here that said to me, who says that markets don't like Donald Trump? And in fact, one trader said that he believes that markets are going to hit a record high of more than 20,000 points sometime soon.
Samira, speaking of fuel, Donald Trump has been a big supporter of the US domestic coal industry. He's also said that he wants to row back perhaps on some of the emissions targets that have been set just very recently in the Paris Agreement. Who is that going to benefit?
Well, look, it's very hard to say exactly what Donald Trump's economic priorities are going to be and exactly what is going to happen right away. A lot is said during an election campaign, and there are still 70 days before he becomes president. And so right now, he is trying to outline his priorities for the economy and, of course, who is going to be taking those key cabinet positions. And that will give us a really keen idea of what we may see happening. So yes, of course, rolling back some of those initiatives that we've seen put forward during the Obama administration, including his relationship with coal in the U.S. I mean, a lot of that was said in the election campaign, but it's really hard to assess whether or not those are going to be exact priorities, number one, as soon as he begins his term in office.
One thing that's been sort of going in the opposite direction, government bonds, global bond markets, they've been falling very sharply. A real sell-off when it comes to US treasuries as well. Is Trump expected to be, the inflation president?
Right, so that's a question. And you know, another question that people are also asking is whether or not, and this is perhaps what fueled part of the rally that we're seeing, is that there are some people that believe that because there's so much uncertainty surrounding Donald Trump presidency for the economy at the moment, they're calling into question whether or not we're in fact going to see a rate rise come December. We have talked about this so much that the Federal Reserve is certainly due to be raising interest rates in the month of December. But because of all this uncertainty, there is really question whether or not that is in fact going to happen. So I think that plays into all of what we're seeing over the last day on markets and what we're going to be seeing for the next several weeks.
And I know you'll be keeping us right up to date. Samira Hussain, thank you very much. Let's check in with some of the other stories that are around for you today. And the slide in sterling has put a bit of a dent in Halford's profits. The car parts and cycling group reported a almost 16% fall in profits after taking a £6 million hit because of the fall of the value of the pound. Halford says it remains confident in its underlying performance of the group. However, there's always a silver lining when it comes to sterling, and it's come in the form of a boost in profits for Supergroup, posting a 31% rise in revenues, and that has been helped by the falling sterling. The owner of Superdry, that's the fashion brand, says its sales jumped by more than a third, boosted by store earnings in the United States and that weaker pound because of all the dollar sales that they've been making. The UK trader Navinda Sarau, one more. There we go, there he is, has pleaded guilty. It's magic, isn't it? Has pleaded guilty to helping trigger the 2010 Wall Street flash crash. He faces up to 30 years in prison after admitting the charges of wire fraud and spoofing. Now, that crash back in May 2010 wiped nearly $1 trillion off the value of US shares. And John Lewis, well, it's unveiled this. This is Buster the Boxer. It's the Christmas ad starring a dog on a trampoline. The department store is pinning all its hopes on this. It's a comedy bouncing dog, apparently. Early research shows that within an hour of launching, it was not only the most shared Christmas ad so far this year, but also has more shares in an hour than all of its previous ads managed in 24 hours. Let's check in with the markets and see what's going on at the moment. That looks a bit strange. Well, markets have been playing up quite a lot recently. Last 24 hours, they've been all over the place. Asian markets were down very strongly initially on response to the election victory. Then we had a rally across Europe. They had a rally on Wall Street as well. And then it looks like we're going to have a stronger open across the US session when they open in about half an hour's time, as Samira mentioned. I think we're going to give up with this. We'll try again next hour for you. See you soon.
We'll look forward to it, like magic. Thanks, Victoria.
Hello, I'm Victoria Fritz. Let's take a look at how markets are trading at the moment. And Wall Street stocks, as you can see down here at the bottom, well, they have been a little bit firmer, the dollar firmer as well. Markets had been sort of continuing their rally right up until the afternoon. It was a rally that they inherited from Asia overnight. It continued all the way through the morning, and then we saw a little bit of a pullback in the afternoon session. The Dow Jones actually hit at one point an all-time peak of 18,769. You can see 712 at the moment, so it's pulled back a little bit. And now most market watchers had predicted something called a flight to safety, so where you go when you think that there's trouble ahead. So things like gold, for example, the Japanese yen. This, of course, all in the event of a Trump win. And many people had been worried about the president-elect's proposed protectionist policies and his fairly undiplomatic rhetoric. What they didn't expect was that the move to avoid risk would be so brief. So we've seen a real whipsawing of markets. Now, copper had hit a fresh 15-month high, and prices of things like fossil fuel-based assets were attracting buyers on the hopes that Mr. Trump is more friendly to the sector. You can see copper up 17%. Antofagasta is a copper miner, and shares were very much at the top of the European benchmark. Shares up about 11% off the back of that copper number. Insurance companies and banks were also outperforming, again supported by the victory of Donald Trump. Trump is perceived to be supportive of banks given his promises to smooth regulation. Similarly for insurance stocks as well, finishing very strongly at the end of the day. Now, before this rally took hold, There were a lot of stocks that were falling, and the only sector that wasn't was pharmaceuticals. Why? Well, the plans for drug pricing are far less draconian in the States under a Republican government than they would be under a Democrat one. But the boss of AstraZeneca, said that Trump is definitely no guarantee of a pharma bonanza. Pascal Soriot said that the new president is likely to scrap the Affordable Care Act, otherwise known as Obamacare, but the price pressures are not going away. So you can see what happened with the share price as a result. Let's speak now to Simon Derrick. He's the Chief Market Strategist at Bank of New York Mellon. Let's start with what's going on with the pharma industry. I suppose, a sigh of relief that they've got a Republican president coming up next. But, the landscape for this entire industry is still very uncertain.
Well, I think that's absolutely right. I mean, you've got a great deal of consolidation taking place in the US insurance industry. There's the sale of generic drugs, which is putting downward pressure on prices there. And again, it's understandable why the leaders of the companies are so cautious. But nevertheless, you do have the fact that this was a surprise announcement coming out in the US in terms of, at least from the market's perspective, as to the president. And you do have what looks as though rather easier regulation when it comes to talking about rules on pharma and pricing. So from that perspective, it could be a little more positive. You could also argue that perhaps if we have a more expansionary economy, then just more generally some of the inflationary pressures perhaps could help pharma as well. So I think, yes, it's understandable why people might be cautious right now, but looking at least for the moment, at least, it looks a lot more of a rosy outlook.
Speaking of a rosy outlook, let's talk about a rosy gold outlook for copper. Unbelievable. Share, the copper price going up 17%. I mean, does that really signal that people really do believe that this push on infrastructure spending is actually going to happen in the States?
Well, I think there's a couple of things there. There was a little bit of a squeeze on inventories going on as well. So I think that's part of it. But I think at its core, yes, absolutely, it's about this promise of infrastructure spending. We talked about $500 billion worth of spending there. And of course, we're also talking, albeit over the next 10 years, there's somewhere between $4 and $6 trillion equivalent of tax cuts. So that spending is going to take place. People are absolutely looking at construction and at copper prices, but they're also looking at defence, they're looking at the banks, as you said. Everybody's looking at where the new positives are going to come here. And that's why we've seen some of the most remarkable moves in equity markets probably in the last couple of years.
Let's talk about what's going on in the bond markets. We don't often do it, but there's been a lot of movement on the bond markets as a result of this election and the victory for Donald Trump. Lots of concern, perhaps, that all of this rhetoric that we've heard about interest rates being too low, and that actually Janet Yellen, who's the head of the Federal Reserve, should be ashamed of herself. Does this suggest that we're going to get a lot more inflation around the corner from this president?
Well, it's certainly one part of this. I mean, there is no question that people are looking at this spending, believing it's inflationary. Also thinking that actually we have a more protectionist society, that wage levels will go up in the US. But there's another side to this as well. And for all the promises of spending, the money's got to come from somewhere, and typically it will come from overseas. You've got to remember we're talking about the fact that already foreign official holders already own about $4 trillion worth of US debt, and the US has already got $14 trillion worth of debt. So the question is, who's actually going to do the funding? And you remember that there's been some rather pointed comments made by President-elect Trump about places like China. In one of his documents, he threatened to call them a currency manipulator. There's a question of who's going to buy that debt. And maybe that's one of the reasons the yields are going up and prices are going down, because people are saying, where's the money going to come from?
All very good questions. Simon Derrick, thank you very much. Enjoy the rest of your afternoon. Now, a quick story for you. The Rubik's Cube that has frustrated generations of puzzle lovers. Now it's been dealt a frustration of its own. An EU court has stripped a key trademark protection from the brain teaser. Judges in Luxembourg found that the cube's shape alone wasn't enough to grant it protection from being copied by others. A sad day for the owners of Rubik's Cubes. That's all from me. Plenty more available on the website. To go and find it, go to bbc.co.uk/business.
Victoria, see you tomorrow. Thanks.
See you tomorrow.